On that note, we'll call this meeting to order of the Fergus Falls Port Authority. Today is Monday, August 21st, 2023. We do have a quorum, and we will get into the agenda. The first item is the approval of the meeting minutes from July 17th and approval of the agenda. Is there a motion?
I'll make that motion.
I'll take Brent's first and a second by Rebecca.
Oh,
He
Sorry,
raised his
Brent.
hand. All in favor, say aye.
aye.
All opposed, same sign. That motion carries. The second item is new business, and we'll call on Bill Sonmore for the 2024 Port Authority budget overview.
Right, thank you. So within your packet, I put together a memo, pretty much just like last year, copied and pasted over and made some changes to it. But we'll walk through the budget document that's in a couple pages, this one, and then go through some financial statements and projected cash balances. And kind of on the big page of it, as I looked through and updated financial statements, we're tracking where we thought we would be, even with the cash balances. And when we talked about using Port Authority funds to pay for those dairy payments, we're tracking with what we expected. So as far as the budget, the revenue side, the property tax levy being the one item we would certainly want action on from the port is requesting the city council to levy a property tax. I'm proposing we bring that up from $60,000 up to $72,000. So a $12,000 increase. That's basically to fund operations of the port, and we'll talk about that down in the expense side a little bit. But going down the revenues, we do put interest earnings in there. I'm putting in $10,000 with a hope we have some good interest earnings in 2024. The last couple years, we actually saw a decline in the value of our investment portfolio, and city governments need to mark our investments to market on a monthly basis, so we recognize that in the financial statements, even though that loss on value was never realized because we didn't sell the investments. And then it has swung back, and we're kind of at a break-even point in 2023 right now. So just a slight loss this year. It's been bouncing around. We had some great gains early on, and now we've had some give back again, but we want to look for over time to see that come back around for the city as a whole.
Are those changes just right in the investment account then? There's not a contra account?
Nope, it's right in the investment account in our, on our balance sheet. So
Okay,
So
thank you.
for here, it flows through the cash account in the Port Authority. So I have some sale of investments in the budget of $65,196. I may tweak that another $100 when we get to September here, but that is to make the February 2024 payment on the dairy loan. That's the kind of the end of the second year, but it flows into the third year because it's based on tax collections of 2023. So the flow of funds there to get through the first two payments of the dairy. And then our rents, $240,229. Of that, $216,822 is for the Community Behavioral Health Hospital. We received that from the state of Minnesota. And then we have some farm rent there at $23,407. Looking at the expense side, the first section under 46,500, Economic Development and Assistant, that's our general operation of the Port Authority. And that's what the levy then supports, and the farmland goes into that. The rent flows into that part as well. We charge 55% of Jill's time and 20% of Clara's. What I do when I budget for Jill's time, I look at where she has worked in the past year and use that as an estimate of where she'll be charging her time. She also charges her time to the CBHH facility down below, as well as the city's loan fund. So on the city side, her salary goes there. We pay the property taxes out of that area, some professional services. CBHH facility, the $216,822. You can see that matches the rent amount. So we budget where we think we're going to spend items, and then that large under building repairs and maintenance of $101,000. That's kind of my plug figure. I put everything else in that to get down to 216, so we're accounting for all the rent. When we don't spend all of that, and we certainly don't, it goes into a reserve fund balance for that building. It's controlled by the state really, but I don't want to give the impression that, you know, if we underspent there, that that's money we have available. That's all for the state building, so. And then on the second page of that budget, we have the transfers out of 65,196. That matches my use of fund balance. That's moving that money over to the debt service fund to make those dairy payments that we have harped on for a few years here. And that'll be it. On the city side, we are proposing to put in a levy now for those dairy payments for 2024. So, because I don't want to take it from the Port Authority anymore and bleed our cash balance down any further. So, and we'll see that when we look at the cash balance. So, we would look for action when we're done with this of that $72,000 levy. It is certainly a slight increase from 60,000 up to 72, but needing that to fund that general operation of the port. Let's look at financial statements a little bit if you'd like. I'm starting with the balance sheet. We have 4 different cash balances now within the Port Authority. The first one being just the general operations of the port for $242,638 right now. Then we're holding money for our revolving loan fund with deed that we received. So $150,813 we received from deed. When we get their clearance to release that, we'll move that over to the project fund of the city because that's for the dairy. So that is revolving loan funds for the dairy. Then we have CBHH operating funds, $8,344. The state pays us on a monthly basis, so we don't carry high cash balances for the operations of the CBHH. But look at the cash balance of that reserve at $589. That's when we're underspending in the CBHH. It gets dumped in there. They do some major improvements at the building. Then we move it out of that cash balance over to the general side. Little bit of taxes receivable there. That's just the delinquent taxes as of the end of last year. We adjust that with the audit each year. Lease receivable, that is the lease for the CBHH facility, and we set that up within this fund for, it's a new accounting standard we had to implement on leases. So exciting stuff there, but it just shows the life. I think that, I can't even, it goes out for several years with the CBHH. You may know too, but 2.5 on that. Due from the state, $12,638. That was the balance as of the end of last year on the reconciliation through, I believe, that was through December 31st. Yep, of 22. We'll adjust that again at the end of this year. And then property held for resale is the cost basis we have in for the Northern property, the industrial parks, the dairy, any of the land we're holding for resale. And I know in the memo I divvied that out of what the cost basis was for each one. Liabilities, we have due to other funds of just over $1.2 million. That's due to the capital project fund of the city for the dairy property expenditures. So hoping to get that cleared up yet in 23, possibly, maybe into 24. The city was awarded that $4 million in the cash legislative bonding bill, and we'll make the purchase happen and then get that cleared out and get the money over to the capital fund. Deferred revenues of $1,336 match the taxes up there, and then the deferred inflows match that. That's part of that accounting treatment for the leases. Fund balances then for CBHH, $20,982. Reserve for the renewal and replacement matches that cash balance up above for the CBHH, and then undesignated of the $2.8 million. But that's the liquid assets as well as the industrial parks that we own. So it's, you know, assets minus liabilities equal your fund balance. If we look over at the revenues versus expenditures, I updated these through the end of July of 2023. Revenue side, property taxes, we've received the first half, so it's what we would expect. The rent, we have received the first half of the farm rent, and then CBHH, we're on track with that. They pay monthly, I believe. Certainly we received now even August rent in as well, even though I'm showing through July. Expenditures are on track for the general Port Authority side. As you know, it's basically wages, benefits, property taxes, pretty predictable. The CBHH facility, we're on track there as well. You know, one of the larger items there, we pay management fees. That's where Ugsted, right? Jill, is who we contract for anything out of the CBHH? Who do we contract with for the CBHH?
We, the plumbing.
Yeah.
And the snow removal on the lawn.
That's right. All that with Atlas, so on track for CBHH. We do have some investment earnings through July of $12,000 on the last page. Bond proceeds came in, that's with that revolving loan fund. Move that over to the, we'll be moving that over to the project fund like we talked about. Transfers out then as well there for dairy loan payments. Then the last page related is the cash balance projection. Looks like this. I like to track this for myself as well, as so I know where are we going, and kind of helps us to figure out the levy of what we should do. So 2023 projecting there with, you know, our budget revenues coming in, budget expenditures going out. Then down towards the bottom of that, I, you know, show how we're going to move money over to the project fund. And then the dairy payments, 2024 projecting, needing that 72,000. The bottom line of that, you can see we're hovering around that $100,000 mark. In 2024, 117,000, drops down to about 106 in 2025. And I think if we look back when we were talking a year ago, I remember $106,000 number is kind of where we're maybe looking at for 24. So at least we're staying in the ballpark there. And that's my rationale for that 72,000. We've been talking about that with our tax levy committee of the city as well, so they're aware of this. This is what I'd recommend we go in with that increase. We can always bring it down by December, but we can't go above what we approve in September with the city council. So we may be doing that on the city level too, is maybe coming in a little bit higher, knowing we may adjust that down for the December truth and taxation process. So that's kind of a summary. It's, you know, it's a little bit vanilla, but I guess that's okay on some things. We're nothing flashy in this budget, nothing surprising what we haven't talked about and where we knew we've been going, but this is kind of just keeping the operations going is what we're looking at. So if you have any questions, we can delve into them. Otherwise, again, we can always change it down if we decided to, but I don't really foresee it because I don't really want to bleed that cash balance down anymore. I want the port to at least have $100,000. If a study comes up or something, you know, we need to work on, we need to have a little money to work with. So.
Right.
So the dollar amount is small, the percentage is high,
Correct.
and so I guess I just defer to the elected folks as far as how it affects as a whole, because whatever part comes over to us is so small.
This
Doesn't
12,000
matter.
isn't that big in the scope of what we're going
Right.
to come to you as the city in September. That'll be larger.
Right. So, okay.
Yeah, so. But very good point. The percentage looks big, but a $60,000 levy right now out of a $7+ million levy is small, so.
Any other questions for Bill? Okay, and you need an action from us tonight to
Yeah, if
approve?
you would approve this proposed budget to forward to the city council then for action in September. And then what we do at city council is we approve a preliminary budget in September, and then we go back to approve a final budget in December with the city council. And we do that in September because Otter Tail County by law needs it by the end of September, so they can get all the truth and taxation notices out. And it's all state statute driven.
Okay, I see Brent has made a motion to approve the proposed Port Authority budget for 2024.
Second?
Steve will second, or Tom? All right, all in favor of the budget proposal, say aye.
Aye.
Aye. All opposed, same sign. And that motion carries.
All right, thank you so much.
Thanks,
Thank
Bill.
you.
And for old business, we have Clara to talk about Progress Drive.
Yeah, good evening. So this is going back to a conversation I think we started several months ago, but revisiting the special assessments on the Progress Drive sites, just to remind ourselves where we are and where we have been, and then to maybe look toward the future, because I think if we're, hoping to have some industrial expansion, we would love to see it happening on Progress Drive. One of the stumbling blocks to that has been the assessments that are there. So the assessments did get paid down by about half each in 2017-ish, based on some funds coming through from a Western Minnesota Industries, which is no longer in existence, but had funds at that point to help with some projects like that. So the assessments are down from where they initially started, but feedback that we get when people are looking at those sites is that they are still high. But what they have accomplished is the infrastructure that make those sites shovel ready, in essence. They were part of the shovel ready program through the state at one point. They are no longer considered shovel ready by the state, but all of the work has been done to get them, they have all of the access to sewer, water, streets, all of that good stuff that you need for a development. So these are the updated numbers. We just had these run end of last week, and happy to take any questions you might have, or just to entertain some conversation about what we can maybe do from either a marketing standpoint or any other standpoint to get people interested. Yeah, Bill, go ahead.
So I'll chime in just a little bit. And I'm gonna just, like I say, sometimes think out loud a little bit. So in the past, our determination was always, once assessments are, and this is very dangerous to have this conversation, but once assessments are levied, you can't ever write them off. And that's why we paid them down with WMI, was a way to do that. So I'm doing a little more research, and do we have the legal authority to drop these some more, is what I've been looking at. Now that would mean we eat that cost. The bonds that finance these improvements are paid off. So in other words, we didn't have these assessments coming in because they were deferred and not built. So in those years, when we were making bond payments, we were levying a property tax over here to pay the bonds because they're general obligation bonds. So in essence, we taxed everyone to pay for those improvements because these assessments weren't coming in, but now they're paid off. We may have the legal authority to discount these some. I don't even know how I feel about that, but I at least wanted to share that I'm doing a little research with our bond attorney. Like I say, it's kind of a dangerous thing to say, but
What did, these are the same lots that Vector Windows was interested in?
yeah.
What did we do with them? I think, didn't we almost give them the lots, but they basically still paid the assessments on them?
Yeah, essentially.
I mean, so it's the same thing. It's just, we would be, if we don't mess with the assessments, we'd have to look at each project individually, which one is going to give the city more bang for its buck as far as jobs and what they're going to build on the property. So, I mean, it's almost, that was our way of getting around the assessments, is we basically were, selling them a lot for $1. And in the long run, we'd come out ahead because of the, as long as they don't ask for TIF or anything like that, we'd be coming out ahead because of the revenue that would be generated from that facility. So
That
it's
makes
almost,
sense.
you're just picking one, and we're just not doing the assessments. We're just coming down, we're basically almost handing over the property. But as far as I'm concerned, it would have to be for just the
The other
ideal
sales.
candidate.
Yeah. So then when we do sell and we charge the assessments and they pay the assessments off, then that goes back into the assessment fund that then we can apply them to future assessed projects and lower the tax levy, so that in the greater scheme of time, then, it goes back into the projects and you're not levying so much now for a new project or something.
This is an elementary question, but I don't remember. are there any allocated numbers in the 126, the total from, that are just general costs of the city that get allocated to these properties? Or are these all direct costs from the improvements in these lots?
Direct.
100%.
100% direct. Now, there was staff time that was allocated to these at the time the improvements were put in, but it was engineering time that was, tracked on the timesheet when they actually worked on the project. So like Clara, Andrew, or my time, none of our time is allocated to these projects. So yeah, there's not an overhead that's charged. It's direct staff time that worked, as well as then the contractor that put it in.
So how does this affect us from a selling perspective? I don't know, Clara or anybody else. I mean, is this, it's coming up because we're getting pushback and we're not able to even work through to get to a point to make it kind of an exchange like Brent's talking about, or how is it tripping us up?
I mean, we've been making sales, it's just we're still sitting on 5 parcels that we have not shifted, and people don't seem super interested in them, and that could be because maybe they're just not right for the projects that are coming forward. But I think a lot of times the expectation is that somebody comes in and gets a really good deal through buying from the government. And in this case, what we've been unwilling or unable to do is say, we'll go lower than the assessed price on these lots.
But we haven't had someone like walk away from a discussion because the assessment's sitting there.
No, probably not, because still they wouldn't probably find a better price for land. There are maybe other
Sure,
issues that would come up.
sure.
And the access is nice because it's off of Tower Road. You have the straight shot coming in over the bridge, and
Yeah.
so they should be attractive that way. But
Yeah.
So this was just kind of FYI today, right?
Yeah.
Yeah, yes, we've been asked several months ago to come back with the assessment numbers, and so we finally had time to do it.
Okay,
No,
perfect. 'Cause
I
the-
appreciate it.
Yeah, because the goal of the port, as I have to kind of get my memory around this again, is really to get those sold and used, right? And keep the business community alive and growing.
If we
And so
had-
that's kind of the goal.
Yeah. Like if Vector would have developed there, that would have been perfect, a great business. We want a business on those.
Right.
And at that point, they even said how many more jobs were going to be created with that and everything else. So, I mean, I think anytime we look into that, I mean, we just need to look, how much is the city going to benefit from this in jobs, in revenue, and everything else? And I
Exactly.
mean, sometimes it's worth more if they have the building there and literally get next to nothing for the property, but we're still getting our assessments. So,
But we haven't had inquiries for a while, have we? So.
Okay. No, that
but
helps.
is that something, I mean, is it wildly known? I mean, because then some people look at the property and say, okay, we got the price and we got the assessments. I mean, is there any way to make it a little bit known that for the right business, we're willing to work on the price?
So the only cost that would be available for somebody to look at would be the assessment cost. We don't put any land price out
Okay.
there. Because
Alright.
what our request is that somebody come in and make an offer,
Okay,
and then we negotiate from there.
okay.
Yeah, that's kind of what I was getting at too. I mean, if they're, as long as nothing's keeping them from having the conversation, then we can have the conversation and go from there. So that's good. Thanks for the information.
Yeah, so good information, and then you'll keep us posted on progress you're making with
Yeah, I think,
information.
Clara, we'll look into that more with Baker Tilly and just talk through.
Yeah.
Yeah, thanks for looking into that.
Yep.
So the positive of the company that would be interested not having to pay those assessments it would be a better deal for them. The city would lose out on
Right.
some future.
On the revenue coming back into the
Investments.
fund where we taxed basically and paid those bonds, but I'm sure all cities do. I mean, we're not unusual, so.
I'm just out of curiosity, on an average, the price of the lot versus the amount of assessments on there, what's the difference? Because I can't
haven't-
remember right offhand how much the lots were going for.
I don't have the price that, because we do have internal numbers on the cost of the land
Our cost
initially,
basis.
but I don't remember what.
And that's the cost basis is fairly low, I think,
I think you're right.
if I remember. And we'd have to look back on our past sales of what we've sold for, and then they paid the assessments.
The last one we sold was in 2021 to Mike Breen, 45,217.
Okay.
I don't recall if that included assessments or not.
I think it did, because the assessments were paid off at the time, so. Yeah. It was probably
That could have been the cost of the assessments plus maybe like 10,000.
10,000.
Yeah.
That's what it was.
Sounds
That's right.
familiar for the
Yeah,
cost
that's
of the
right.
land. Yeah.
Okay, well, thank you for the information. And that would be good to keep that top of mind and continue to work on those, so thank you. Okay, any other questions? Comments? All right, if not, our meeting is adjourned.